The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and this is the 11 o'clock till noon hour, Tiger Technicians Hour. Woo. And my pleasure to be here Monday through Friday, 877-927-6648. And thank you to all the hosts. Great shows earlier on. Hopefully we can keep up that pace and look at the charts to see the H that goes to the lowercase m pattern. We need to break right through in the E-mini, break into the 1945 to 1947 level to say, aha, we're done with this 1920, 1930 area. We're on our way higher. Or you're going to see this candle right here, kind of a Chapman Wave Roman candle. And if the E-minis go to I'd say below 1910, there's a problem. All right, so let's just get on with the story. The Dow is down 5 at 16,479. The S&P is down $1.30 at 1928. The Comp Index is down 10 at 45.31. The VIX is actually at 2102, so it's still up in that 20 area. That's where there's still going to be selling pressure until the volatility index starts to trade under 20, really what we're looking at, until the volatility index, the VIX, goes into the 18s or lower. Sustaining rallies is going to be tough. Fabulous move yesterday. Let me finish this before I get there. What we're looking at is gold. The GLD is up 81 cents at 118.41. Gold itself is about unchanged at 12.38. Silver is at, silver disappeared. Silver is right there, down 14 cents at 15.18. We've got high-grade copper up 44 cents at 2.53. Now, this is going to be very important because the dollar is at 97.40. The dollar is holding sway, I think, also with the crude oil. And if you're looking at the dollar, it's making a leg C, maybe a peak C today. Nice 50% retracement from the high of 19 in the 1980s to the 95.24 level. What's really important at 97.41 is this strength in the stochastic continues to gain momentum and the MACD builds up. It's going to be tough to do, but the dollar index needs to get to the 98.50s. If it gets to the 98.50s, finally, it'll be essentially assisting in curtailing the rally in gold, at least for a little while, as gold takes a very well-deserved breather. At this point, you just have to be impressed with the gold stocks and gold itself. Look at this. Remember we discussed, let me do this two things at once. I was getting a call about this candle here. Was this an inverted Chapman Wave Roman candle? You know, it's really not, because I like to see the body of the candle on the downside, at least half to a little bit more than a half of the part against which you have the longer wick, right? In this case, it's upside down. There's really quite a small wick and a very big body. And what I'd said is, remember, I drew this right on air. I said, hey, I'm going to draw a rectangle right away. And what we can expect in gold, if it holds the 9-period exponential moving average and it treats the moving average as some kind of a stair-step walking path, then what we could look at is, if I can get it right here, the 120-minute chart would go to a peak A, a B, maybe even a C and a D. Well, we got that. It went all the way. Look, this is the rectangle right here. That's the rectangle that we're looking at. From the high that was made at 1260 something, that's right there. 1254.30, is that this one here? Let me just double check. 12, yeah, that's that one. So the high that was made on the 11th, that is really important. That's the one that I drew in like this and drew a left side, right side price time match. Well, now I have to extend that price time match to about there and double it. Here we go. So make it green. And that already takes us to where we are. So this is saying that so far, gold has not been able to get to the high that was made at 1263.90 on the 11th of February at noon. But it's got real close. It got to the 1254.30 level. Now it's having another inside rectangle formation. Just to draw it in and get rid of that right there. So gold is acting very well. And at this point, the wind seems to be at its back. It's acting very well within a trading range between 1220 and about 1250, 53. In fact, it's a little bit nearer term that I want to look at it. And I'd say that by tomorrow, if the dollar does pull back, then gold might have a spike to 1243.30, 1233.40 to break out a little bit to start leg C. So this is a very important moment in gold in that if it's a consolidation, it's acting really well for a consolidation. It's having what I call the high-level consolidation, just going sideways within a trading band with the borders very clearly defined and with the 9-period moving average now at 1221. So let me do a couple of things here before we run out of time. EUR, USD. Oh, I didn't finish with the candle. The candle that we were looking at, I don't believe I'm going to be calling it an inverted Chapman Wave Roman candle. It just doesn't have any characteristic at all. The pattern that it is it's an outline. It's like looking at the flagpole, and then you get your sideways flag pattern. That's really, it's one of those more traditional looks. And you can see it's even confirmed in the weekly chart that's going sideways after a spectacular move from the 1050 level all the way to that 1260. So it just needs a little bit of a digestion here. Let's go to the EUR USD currency pair. And what have we got? We've got a peak F top, which also didn't get to its recent high in that retracement back to the high that was made back on the 15th of October at 1.1494. And what's happened is it went all the way down to 1.05 something, wasn't it? Yeah, 1.05387, all those numbers. And then it has a rally that takes the same amount of time, but it fails to get to the previous high. It fails just under it at 1.1375, and now it's pulling back. And this is the area. This is the digestion area. And I'd start to say that it's going to have good support between 109.2 to 108.2. And if it breaks that level of support, it's merely going to go all the way back down to test this really strong candle of the 3rd of December. And we'll see what happens there. A couple of things I want to look at the same time, just high-grade copper, HG. Okay, now we've got that out the way. So it's in the trading band, nothing to speak of here. Move along, folks. High-grade copper is just in this little mini trading range for now. Now, there are a couple of things I want to look at. Crude oil, CL. Crude oil is, in fact, still negative. It's down $1.03 at 31.12. It pulled back the market. I completely forgot I had this chart in another, what do they call these things again? Another workspace. And here it shows you the movement with, it just shows you directional movement. So this is crude oil right here. It's actually the USO. So I've only got it trading. I can't find my chart that does the overnights, but this is the intraday. And this is the red is the USO, the United States Oil Fund, and the green is the SPY. So you've got a nice relationship. It doesn't mean to say that because crude oil has pulled back very sharply that the S&P has to, but it does show you directional move here. I'll be back. Basil Chapman, Tiger Technicians Hour. I want to look at the long-term chart of the S&P. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Before I forget, there are a couple of things I want you to do. And you know that I move around very quickly with this. I get emails, I get all sorts of things. First of all, very, very interesting article sent by Fidelity that discusses something that I've been talking about for a long time, but in a different way, because there are more facts than I like to give. In that I'm not an economist, so that when I suggest something, it's really based on charts and it's based on observations, anecdotal, empiric, whatever it is. But in this case, this lady Ensbo Mattingly, Miss Mattingly says, if you're looking at what indicators tell you you're probably not facing recession, she says that adjusted for inflation, income is up about 3.5% over the last 12 months. The United States economy has never gone into recession when disposable income is growing at rates like this. So I'm keeping it now in mind, like a little bit of a fact there that says to me, good. It's kind of my thinking in a sense that there's a delay going on, that there's a rotational, I'm going to call it a rolling recession that has gone to different sectors. I'm going to get into that more tomorrow in Technical Friday. What I wanted to do to show how interesting this particular phase is, look at 2008 at the top in October at 15,076 in the S&P. 9 months later, we're 9 months into this correction since May, the S&P made tops in May. And I wish I could have done this beforehand. I'm going to do it right now. Here we go. Give me my tool that says I can do. And I still haven't been discussing the politics of politics. I keep running out of time. But let me just type this in. I had this written down, but not on this particular chart. 1576. Let's go to the low that was made right 9 months later, right there at 1200. Is that correct? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep, 900. So that's 1200. 1, 2, 0, 0. Oh, this is very interesting. Now, 23%. 9 months after the top in October of 2008, the S&P had fallen 23.8%. 9 months after the 2134.72 high of May of 2020, we've only fallen 15%. That is from high to low, not where we are right now. Does that say that, great, we've used up time, some price, but more time than price? And that now we could start looking at some stabilization with this major long-term trend line maybe coming up in March, being hit, who knows, April. But the fact is that trend line, which is now at, right, let's go to the cross country. Let's go to next month. So we're going to March, and we've got to look at it as perhaps the first level of support will be 1783 in the S&P, and the major support will be 1764. A break of a close below 1764, 1760, let's say, starts to imitate that particular pattern there. But wait a minute, wasn't that a Chapman Wave Roman candle, one there and one there? And once we broke halfway into it, you went below the low. But wait a minute, remember we did that with the candle of January, because it went lower than the candle of of August, the Roman candle there. So this is the second Roman candle. It did go to a lower low, and yet all the price movement since then, since the low, has been closer to the body of the candle. I'm going to expand this because someone will say, can you expand the chart? And I'll do that now. And I'm expanding it to show the day is young. We've seen the last trading day of a month make a spectacular move to go from bearish to bullish in a monthly chart. We've seen the last day of a month turn around and go bullish to bearish in a monthly chart. All I can say is right now at this particular point at 11:22 a.m. on February the 25th, right here, that candle with the third long-legged doji candle, but the second one in a row, is suggesting that the S&P, this chart, whatever it is the S&P, is wanting to climb into the body itself, and it hasn't done that. So it's got a couple of days, just a couple of days to do it. And where would that be? It'd be the close of 1940.24. A close into the body starts to make the 9-period exponential moving average of 2002 enticing. A close below, and I'll give you the exact number now. Let me just move. Look at this arch formation. I mean, there's nothing like these arch formations. They are indomitable. I mean, it's hard to break them once they start to be in place. We saw that back in 2008. Look, there it is. There's an arch formation. I took it away not to make it messy. But look, once you broke that low of 1219 back in June of 2006, once you took that out, look, there it goes, bam, and you're on your way down. So this is going to be very important. Now, why am I talking about rolling recession? Why am I talking about what's going on? I believe that because of the characteristic, do you think with Donald Trump, I'm going to talk a little more about politics tomorrow. I don't have to really, you remember it was last summer, the beginning of last summer, I was talking about my analysis of the, I always do this on the political front for decades. I look at the stock market and say, what is the stock market telling me? What are the political, socioeconomic things telling me? It said, you remember what I said? Good chance that you've got Donald Trump against, maybe it's Clinton, but the irony would be is if you had a capitalist against a socialist, and in one of the great bull markets of all time, you've had someone in the White House who hates to talk about the success of the stock market. It is just anathema to him. He will not do it. And yet the stock market has been on an absolute tear to the upside. So, and that's the other thing. And tomorrow I'll be talking about I'm going to do this every day. I'm going to talk about the 1%ers. Bernie Sanders is a 1%er. To get his income, I'm off on the rant again. To get his monthly income when he retires, you would have to have in the bank, at the interest rates the way they are now, I'm talking about safety. I'm talking about a guaranteed income. That means there's no risk. Your capital cannot be at risk. Bernie Sanders would have to have the minimum of $4 to $5 million in the bank to get what he's going to get. Plus, he gets his insurance. That alone is worth money in the bank. All right, let's get back to this chart. So now what I'm looking at is I'm saying, hey, wait a minute, we've used 9 months. And believe me, the news, there's been very little good news. But if you dig deep, the jobs are starting to come back. Just time alone will do that. If you look around, you look at the help wanted. Okay, so now you're seeing a lot of signs in the CVSs and all that, but you're also starting to see in the newspaper more and more jobs of the higher caliber being offered. That's at least in the Northeast area. So I think that there's been something that's going on, and that's the reason when I spoke yesterday, when we were looking at, I spoke with Brian and I said, my bias right now is to be thinking more towards the upside. You've got your insurance. When I spoke to Bob in New York about Macy's, I was saying, the RTH has held very well. TJ, I can't remember if I did it in the den or out on the mic. I spoke about TJX looking great, having a terrific move. So there's something going on here that's a little different, and I'm going to talk a little bit more about it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I was waiting for this exact moment here because I wanted to show you something. Let me just do this. One click, and I'll do another click. And yeah, there it goes. New parallel. Now, I just wanted to, while I'm doing the clicking here, I just wanted to continue to say, it is really interesting when we're looking at the political candidates, when we're looking at the reporting, that in a sense, the mea culpa is really, it's not quite there yet between the press that were completely dismissing Donald Trump And it's not Donald Trump, it's his message. And my complaint has been that nobody is pushing him to be way more specific. And we will only find out later on whether it's very important for a president to have specific goals in mind to achieve, and then work on the plan to achieve them, or to articulate beforehand without knowing all the facts. This is going to be really interesting. That's number one. That's if he does, first of all, become a presidential candidate, representing the Republican Party, and then if he gets in. Second thing is, I just wanted to mention here that in looking at all the politicians, you've got to not look at the politicians. You have to look at the public. You remember, that's what I did way back a year ago. Not a year ago. It was 8 months ago, whatever. And I said, look at what the public is wanting, because that's what the president is merely the little pinnacle right at the top of a really big triangle. And if you're able to pinpoint and put the right triangle, the right person in that triangle, you've already got your everything fits, because the modus operandi takes care of itself. That's number one. Number two is, remember I spoke about the different ways of looking at the Electoral College, and then I had this book. I met this professor, as I guess an expert in it. Maybe on page 65. I'm struggling through the book. It's not easy. But this Electoral College is going to be something very important. We're going to find out as it moves along. So there's a lot to talk about. And what does it do? It represents part of what we're looking at in the market, the at ease that the market will either be if it starts to get some sense that there's a little bit of, they don't care who or what, they just want the market. I've always said the market hates, people say market hates uncertainty. I say, oh, nonsense. Every single day it's uncertainty. The market hates uncertainty about uncertainty. That's when you start to get these big swings. So if there's a little bit of certainty, finally we're going to get some breakout to the upside of this arch formation that goes like in lowercase h to a lowercase m, and until you break out of it significantly, you got to think trading range, trading range. So yesterday it was 11:35 exactly at this time, and I said, oh, I love the look of this candle. Where was it? Right here. I said, this candle looks really good, and I typed in during that break that we just had a moment ago, and I said, if I can just move this to the right, I typed in, this can be a very positive pattern if resistance at 1900 to 1902s in the E-minis is pierced within the next 35 to 40 minutes. We were right there. That's the candle. It broke out, came back, retested that Pardite circle, and then turned the 9-period exponential moving average into the most fabulous stair-step move to the upside. Beautiful, beautiful movement all the way to that 1943s area, and now it's pulled back. It had one big spike this morning after coming back down to the 200-period exponential moving average. Now it's just digesting these gains. I suspect that this is the base that you're going to have to watch, 1924 to 1920. If it takes that out of the downside, we'll go down deeper. We might just be consolidating a huge gain from yesterday. Well, let's get out of that, and let's go back to the S&P monthly for a moment. I want you to just show two things. One is the MACD is very negative, and it's expanding still. And the stochastic is down at 62%. When we were looking at those 9 months, 9 months right there. So here we go, 1, 2, 1. Remember, Roman candle, doji candle, breakdown, another Roman candle. So we go 1, 2, 3, 4, 5, fifth month gives you a doji candle for a balance, hits the 9-period moving average, can't close above it, and kaplop, it goes down. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. The 9th month, right there in July of 2008, is where I'm going to put in a vertical line so we can compare them. There's the vertical line. Make it a little bit thicker and a different color. Let's make that red. So I'm going to make it white. I'll make it nice and thick. Oh, that's good. Whatever that is, that's gray. So there it is. Look where the MACD is. Look where the stochastic is. Now let's move along. Let's squeeze this. See where we are? Right here. And now what have we got? We've got a vertical candle, the 9th month right there. The 9th month made a higher low bar. It made a lower low bar back in 2008. But this month was higher by even just a few cents. We went, I'm sorry. In the the SPY, it was 5 cents or something higher. In the cash, it went to a lower low. So the theory that in the Chapman Wave Roman candle, when you get hot, if you start to trade in the middle of that wick, you're going to probably test the low and probably break it. Well, there it is. And then there'll be a rebound, and we've got the rebound. So that says, look at the difference now. Let me make this nice and thick. Make it thick and gray. Make it even thicker. Look at that. So the MACD is opening up. It's about at the same place. The stochastic is way higher. Does that give you a lot more room to go down? Or is that saying, hey, wait, there's more internal strength? Nobody's talking about the internal strength of the stochastic. Or is this just merely saying, hey, wait a minute, what are you talking about? This is just saying to you that if we go down in the MACD all the way to the 2009 March low, with the MACD just slumping way down, surely the stochastic's going to go down under 20%. And now you've got from 62% to 20%. That 40% can take you down easily 200 points on the 150 to maybe 200 points on the S&P. So what we're seeing right now is really important. I want to take a little time today. I know tomorrow's Technical Friday. I don't have time for Technical Friday. I wanted to show it now because as we're talking, you've got the candle that is most important. It's got 2.5 days to go. And so far, it's acting very well. Now, let me get rid of this so you can see the candle right there. Now, I'm going to put it back. And what I will do is I'll turn this into TradeStation allows me to do this. It's great. Into a 70% transparency. There you are. No problem. You can see the candle itself. This one I want to keep nice and thick. So there it is. I wanted to show you now what happened in the Dow. And you remember, I'm talking about the Dow now for the first time as having the makeup. This is just, of course, my own person. I mean, it's my opinion. It's not, I don't have anything to do with the Dow other than I track it every day for the last 30 years or more. The Dow did not make a lower low. It's made two consecutive higher lows. Look, 15,370 in August, 15,450 in January, and this month it went to 15,503. So in a sense, we're looking, remember I spoke about this, you go to Myrtle Beach, you go to Chappaqua, where you go anywhere you want along a coast, not Chappaqua, it's whatever it is. And you're looking at these houses that are put up on stilts because of the water. And these are on stilts and they're surviving the water so far. So I am impressed. I mean, just impressed by the technical veracity of this chart. I'll be back. The Dow's up 34, S&P's up 255.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. The chart I'm showing here is the VXO. This is a CBOE volatility index, the original one. And it shows you how many times it's gone to a peak D. Chapman Wave methodology, you go from the lowest, most identifiable low bar, and you merely try to count 4 peaks high, and then you've got to be careful. Other things can happen. Could continue higher, but that's where you've got to be careful. And I'm just going to, for the moment, do this. I'll do it. Normally, I'd do this on a Friday when we do more involved Chapman Wave notations, etc. But I just wanted to do this real quickly. Why? Because this is an important moment. I showed you the arch formations. I showed you how you can break down. I'll show that again. So A, B, C, your objective is get to at least a D, and that's where you got to be careful. Look how many times we've gone A, B, C, D, recycle, A, B, C. No, I missed that too quick. A, whoops, I didn't mean to do it that quickly. And then I'm going to show you with the up arrows and down arrows, just exactly what we're looking at and why this is going to be quite important right now. Look, you've gone from a buy signal to a peak D, another peak E, another buy signal to a peak E. So there you get your down arrows. Now you come down. I would normally count the troughs, but I'm going to do this quickly. A, B, C, D, and no, D, E. This is E right here. And trough E, and it starts another move to the upside. And then what does it do? It does the Chapman Wave instant restart. This is one of those cases where at a peak D, something else can happen, just like at a peak G, the 7th highest peak. Now what's really important, something's going on here. I'm going to show that then it was a peak E, and now I can't put in an up arrow because the stochastic's only at 61%. The MACD is good, but not great. So I have to put in a plus sign. And what happened is it did go to a peak A, peak B, peak C, and then it went to a D. But this is the smallest. Look at the tiny move that it made from just under 20 to 25. And what we've done now is we've got a sign that says we're pulling back. But look, every other ABC, look how big it was even to C. ABC, even this one that took time was maybe a little smaller, but it took time to move to the upside. So this is going to be really important. I will get now. Let me just take this away to say that the volatility index in the Dow volatility is specific to the Dow, although I usually use the VIX because it's based on the New York Stock Exchange, but the way I use it is different. I use it specifically for certain signals that have been absolutely fabulous over the last many months, years. So I'm looking at this and I'm saying, wait a minute, the patterns are the most important thing. So I'm going to do this for you. I've shown you that there's a W pattern that would be really powerful. That's the pattern that you saw right here. This is the pattern that we saw from here. There was an arch formation that turned into a successful H, and when it broke out, it just went straight over the 16,933 level of mid-September and went right to 17,113. That is a powerful move to the upside because it continues holding the 9-period exponential moving average. We haven't seen anything like it right now. And if we go sideways even maybe another day or two, to my way of thinking, we're running out of time. So when I said we want to rebuy certain things, I wanted them lower down today. That's number one. And number two, although we're still looking at mostly the long side, I'm looking at this and I'm saying, if you start to see, I'm sorry to be juggling this around, this second arch formation, because by the end of the day, the Dow gives up the gains and it closes near this 9-period moving average of 16,391. I have no choice but to become more conservative in my outlook. It's just real simple. Even though the technicals are really good at this particular time, technicals without a price commensurate movement in the price doesn't mean a thing. It means that you're using up, you've got your foot on the accelerator. Unfortunately, you're in sand or on ice, and your wheels are spinning, but you're going nowhere. You're usurping energy. That's up or down. In this case, it's on the upside. We're not getting that spike. So I have to respect it. That's number one. So the pattern is either we're going to buy by the close of February, there's a sudden buying spurt because fund managers say, hey, this has been good. I don't want to look bad when the report goes out. I need to do some buying, and the Dow type stocks are what they'll grab because some of the NASDAQ ones are not doing very well. So that means that there's a chance to move higher, but you have to get to 17,700 before you can even think of a retest of the 200-period moving average, right? And on the other side of the coin, failing here and using time means that you've extended your consolidation, your sideways consolidation without breaking down. And all of a sudden, the magnet of these two Chapman Wave Roman candles at the bottom kicks in. If the Dow closes by, let me just double check here. I think it's the last day of the month is Monday the 29th. So if on the 29th, there's just a sudden selling spree over the weekend, something happens, crude oil plunges, I don't know what it is. If you start to take out this wick, you go underneath 16,000, not you, the Dow. If the Dow goes under 16,350, we're looking at something way more serious that says the upside is now extremely limited. It doesn't say you have to crash. It says be careful because you're going to have to do another retest of the mid 15,000s. I just wanted to get all that out so that tomorrow we can go to stocks. And I thought today would be kind of an easy day with just backing and filling after the big move yesterday. It kind of is doing that. I promised myself I'd click on a whole bunch of charts here. Maybe that's for tomorrow. I wanted to talk about this chart here. This is the Dow. We're going way back to 1981. This is when Reagan came in, and you had that fantastic August of 1982 sudden spiral to the upside. That really kicked off the mega bull market that we've been in. We've been in for 20, 30, 37 years. And even with the corrections, because look, another thing I wanted to talk about, look how big the moves are. Look what happened before. Well, of course, the trading range would have looked as big if you used the highs and the lows. But using that as your template, look how amazing the moves are. Look at the beauty of these channels. So I showed this channel I always show this channel. This is the monthly chart of the S&P. Did I show it yesterday? And look, we're under it. We went to that 18,010 level. And now you're trying to test former support is now resistance. This is a very strict way that I use in the channels. A little more liberal says that the pattern I showed you before, I'll do it just now. I don't like to make the charts messy. So I'm just going to do this. This one here says you've got quite a way to go to test the major support long-term, absolutely taking the low of 666 in 2009 and the low of, was that of October of 2011 at 1292. You want to be strict, then even this one was successfully tested. So that says in the month of March, you'd have to break 1782 to take out that. That's over $2,300 Dow points, 23 points in the S&P. So 23, what am I saying? 2,300. No, 230, that's what I meant to say. Okay, so now we've got our final break coming up. When we get back, we're going to look at a couple of stocks that I think are really interesting. I haven't even spoken about bonds, but you remember what I've been saying? I don't know if I want to talk too much about it. Hey, it looks like the gold chart. You've had your flagpole and you've got your trading band. We're in a trading band just like gold. I'll be back. Basil Chapman, Dow's up 45, S&P's up 3.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Well, folks, so we're on to charts. Question of the den about PPL. PPL is PPL Core, whatever they do. They're trading at $35.95, up 2 cents. What I suggested was that it's digesting gains. It has a way of, I changed the color so you can't see my notation here. I'll just change it back here quickly. So this is very important because it's gone A, B, C. That's C1, C2, but I am going to call this right here, watch this closely. Peak C1 is probably one I should talk about tomorrow. So this is going to be C2. This is a brand new move because it broke to a lower low. So this has to get an up arrow, and this has to be called B, peak B. And we're looking at some kind of a consolidation. Utility, is it? Yep, PPL Core is an energy and utility holding company. Oh, I like this group. This is B. I can't call it anything else but B, and because of it, I'm suggesting that it's just got, this is the pattern. Let's make it real easy. It's got a cup formation. It needs maybe just another couple of days, and there's a good chance by Wednesday or Thursday next week, if it starts to trade in it's a 35.97. if it starts to trade above 36.65 at any point, doesn't even have to close there, it just needs to squeak above it, there's a real good chance it'll start to make a leg C above 37.23 as the next move up. Most importantly, it might need a little time to consolidate, and if it does, watch 35.40. A close below 35.40 says, it might take a little longer than a week before it rebuilds the strength, but the monthly is looking great. The weekly chart is A, B, C is a peak C. Yep, I think it's going to a D. Just if you had to ask me right now, I'd say I'd only start just a little bit in. If you're in it, that's great. But if you're not, you can nibble here. I would rather buy a breakout to the upside. In other words, I'd nibble here. I'd add another position at 36.66. Okay, I hope that helped. I got that done. And questions, I got a couple of emails. I don't know if I'm going to be able to get them. I got to the ones from yesterday. Oh, yeah, that was the candle. The gold candle, inverted Roman candle. I wanted to do that. Just a real quick look to the left here. I got these computers all over the show. Taking its time. Come on. We're running out. There you go. No question. Basil on Trump. All right, I'll have to I do that. Remember, I'm not giving political advice here. I'm talking about the politics of politics. I don't care who you vote for. That's your business. My thing is just to look at it in relation to the market, to the socioeconomic things, etc. I've already made my statement. I made it last year. I'm just staying with that. Okay, now where are we right now? I love what's going on. I'm a little upset in a way because we got taken out from some really fantastic positions, made nice money, but that wasn't the point. The point is getting back in, but we do have some things that we got back in, so that's okay. Now what we're looking at is that 200-period moving average has become support. What I'm going to say to you is I'll make it real simple. I'll go to the Dow and the S&P. The Dow's up 61, the S&P's up 5.44. They're kind of in sync with the Dow, a little bit stronger. In a way, I would prefer if the S&P was a little bit stronger, but let me just do this right now. Let's go to the VIX index. The VIX right now is pulling back at 20.47. Oh, I did all that work and then I forgot to talk about it. Was it here? Let me just see. Give me 1 second. VIX.X. No, I can't get to it quickly. All right, just make it real simple. The VIX is at 20.49. If the Dow manages to break into the plus 80s to the plus, especially if it gets to 100 today, I wish it would do that tomorrow, not today, but if it gets there today, and the S&P is up 8, and that's at about 2 o'clock to 2:15, I think there's going to be buying pressure enough to push the VIX index below where it was right there at 20.226. And that was yesterday on the 24th. So that's going to be really important. A close on the 10-minute chart. You need only one close below it, below 20.26. That's going to help the market. I'm still looking at the arch formation. I'll just go back to this chart as we're wrapping up here. I'll be back tomorrow, Friday, and have a great rest of the day. And stay tuned. You've got your swimming lessons. You've got everybody. Don't forget, you've got Andy Heck's webinar tonight. Don't forget that. There's the...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.